Hello everyone. In this class, I am going to teach you how to post journal entries to Ledger. See, in the previous classes, I explained how to pass journal entries using both the traditional and modern approaches to accounting. Please watch those classes first before proceeding with this one, and I will provide the link in the description box. See here I have taken few journal entries. See here. And now we will prepare the ledger accounts. Before that, I will explain how to prepare the ledger accounts, means format of ledger accounts. Here first we have to write down date, particulars, JF. It means journal folio. It means what? It refers to a column in a journal where the reference number of the ledger account is recorded. It helps to track the corresponding ledger entries for the journal entries. This is the meaning of journal folio. Okay, and this is the debit side, and in credit side also we have to write down the same, that is date, particulars, JF and amount. Now we will see the journal entries. See here. First one, on June 5th, the entry is cash account debtor to capital account. Means business started with cash, that is rupees 2 lakh. First step is we have to open two accounts here, that is cash account and capital account. And next what we have to do, see here, we have to open two accounts, that is cash account and capital account. And in the debit side, we have to write down 2, and in the credit side, we have to write down by. Debit side 2, credit side by. And see the journal entry now. That is cash account debtor to capital account. Here cash account is debited. So in the cash account, here we have already opened. Come to the debit side and write down the opposite entry of cash account, that is capital account is the opposite entry of cash account. So write down to capital account, that is rupees 2 lakh. Here we have to write down the date, that is June 5th, that is rupees 2 lakh. And here we have opened capital account, and here capital account is credited. So come to credit side of capital account and write down the exactly the opposite entry of capital account, that is cash account. So write down cash account. See here, on June 5th, 2024 by cash account, that is rupees 2 lakh. In this way we have to post the entries from journal to ledger. Now we will move to the next entry on June 8th, that is bank account debtor to cash account. Being opened a current account with bank. So here cash account we have already opened, and here we have to open the bank account, that is rupees 80,000. See here we have to open the bank account now. Here bank account is debited. So in bank account, come to the debit side and write down the opposite entry of bank account, that is to cash account. Write down here to cash account, that is rupees 80,000. And second account is to cash account. Here come to cash account, and here cash account is credited. So come to the credit side and write down the opposite entry of cash account, that is bank account, that is rupees 80,000. So by bank account, that is rupees 80,000. Now we will move to the next entry, that is purchase account debtor to Gulmohar Fashion House account. Being goods purchased on credit, this is the transaction. This is the journal entry. Purchase account debtor to Gulmohar Fashion House account. They purchased the goods on credit, that is rupees 30,000. So here we have to open purchase account and Gulmohar Fashion House account. See here. Here we have opened purchase account and Gulmohar fashion house account. See, purchase account debited. So here go to debit side and write down the opposite entry of purchase account, that is Gulmohar Fashion House account. So on June 12th, 2024, June 12 to Gulmohar Fashion House account, that is rupees 30,000. 30,000. And next go to Gulmohar Fashion House account. And here Gulmohar Fashion House account is credited, and go to credit side of Gulmohar Fashion House account and write down the opposite entry of Gulmohar Fashion House account, that is purchase account. So that is June 12th, 2024 by purchase account. That is rupees 30,000. Clear? Now move to the fourth entry on June 18, rent account debtor to bank account. It means what? Being rent paid. Rent account debtor to bank account, rent paid through check, that is rupees 5,000. So we have to prepare the rent account, and bank account we have already prepared. Here, see here, in the second transaction we have already prepared the bank account. So need not to prepare again here, but we have not prepared, opened the rent account. So now we have to open the rent account here. See here, rent account. Okay, see first one, rent account is debited. So go to debit side of rent account and write down the opposite entry of rent account, that is bank account. Opposite entry of rent account is bank account. So write down, that is June 18 to bank account, that is rupees 5,000. Now to bank account, to here, see here, to bank account. Go to the bank account. Here bank account is credited. Bank account is credited. Go to credit side of bank account and write down the opposite entry of bank account, that is rent account. That is June 18 by rent account, that is rupees 5,000. Now we will move to the next entry, that is see on June 22nd, the entry is cash account debtor to sales account. Cash account debtor to sales account. Here cash account we have already opened, and we have to open the sales account now. See here, sales account. Sales account. Okay. Now cash account, here cash account is debited. Cash account is debited means what? Goods sold for cash. Cash account is debited. So here cash account is debited. So come to debit side and write down the opposite entry of cash account, that is to sales account, that is on June 22nd. June 22nd to sales account, that is rupees 15,000. That is rupees 50,000. And next account, that is sales account. Here sales account is credited. So go to credit side of sales account. See here, credit side of sales account, and write down the opposite entry of sales account, that is cash account. June 22nd by cash account, that is rupees 15,000. Okay, June 22nd. Correct. 15,000. To sales account 15,000. Now next one. On June 25th, Gulmohar Fashion House account debtor to cash account. Means cash paid to Gulmohar Fashion House. Here we have already opened Gulmohar Fashion House account and cash account. So Gulmohar Fashion House account is debited. Gulmohar Fashion House account is debited. So come to the debit side of Gulmohar Fashion House account, that is on June 25th, and write down the opposite entry of Gulmohar Fashion House, that is to cash account, that is rupees 30,000. To cash account, that is rupees 30,000, and second one, that is cash account, is credited. So go to the cash account and go to credit side and write down the opposite entry of cash account, that is Gulmohar Fashion House account, June 25th by Gulmohar Fashion House account, that is rupees 30,000. Fine. Now we will move to the next one, that is on June 30th, the entry is salary account debtor to cash account, being monthly salary paid, that is rupees 6,000. We have already opened the cash account, but we have not opened salary account. Now we have to open the salary account. Okay. 1 minute. Salary account. We have to open salary account. See, salary account. Salary account. See, salary account is debited on June 30th. So come to debit side of salary account, that is 2024 June 30th. And write down the opposite entry of salary account, that is to cash account. To cash account, that is rupees 6,000. And next one is to cash account. And go to cash account, and here cash account is credited. So here cash account is credited. So go to credit side of cash accounts here. On June 30th, by salary account, the opposite entry of cash account is salary account, that is rupees 6,000. And now last one, that is on June 30th only, that is office machines account debtor to bank account, means office machine purchased, that is rupees 20,000. Here bank account we have already opened, and we have to open the office machines account. See here, office machines account, and here office machine account is debited. Go to debit side of office machine account and write down the opposite entry of office machine account, that is to bank account. To bank account, that is rupees 20,000. And go to bank account. Here bank account is credited. See, bank account, that is credited, and go to credit side and write down the opposite entry of bank account, that is office machines account. That is rupees 20,000. In this way, we have to pass the post the journal entries to ledger. Now, what is the last steps here? Now, we have to check whether the debit side or credit side has larger amount. Okay, first we will see the cash account. See here, in cash account, see here, debit side is greater than credit side. So debit side total is rupees 2,15,000 and see here, that is rupees 1,16,000 and write down here also 2,15,000 and here write down June 30th by balance carried on. CD means carried on. By balance carried on. It means what? We have to write balance carried on the side of the account with the lesser total. It means ensuring that the account balance means this is the closing balance. Balance carried on. It means the closing balance. We have to write balance carried on the side of the account with the lesser total. Here lesser total, it is having credit side. So we have to write by balance carried on. Fine. And now we have to calculate the difference. That is 2,15,000 minus 1,16,000. That is rupees 99,000. That is rupees 99,000. And next immediately we have to write or we have to record the opposite side of the ledger. Opposite side of the ledger. Here credit side means here in debit side we have to write July 1st, that is to balance brought down, that is rupees 99,000. Sorry, here place is not there. In capital account I will explain neatly. Okay, that is to balance brought down, that is rupees 99,000. Fine. So in this way we have to record the entries in the ledger book. Fine. Next I will explain in the capital accounts. Here in capital account only credit side is having rupees 2 lakh. Okay, write down here 2 lakh and here also, here we have to write on June 30th, that is by to balance carried on. Why? We have to write balance carried on the side of the account with the lesser total. So to balance carried on, that is rupees 2 lakh. Okay, so total 2 lakh. And immediately record on the opposite side of the ledger, that is on July 1st, that is by balance brought down. It means the opening balance of July 1st, that is rupees 2 lakh. Fine. Next we will go to bank account. See here. Here 25,000 and here the total is 80,000. 80,000 means debit side is having more amount than credit side. So write down here, write down 80,000 and 80,000 and check the difference. Here 25,000, 80,000 minus 25,000, that is 55,000. So on June 30th by balance carried on, that is rupees 55,000. And here on July 1st to balance brought down, that is rupees 55,000. Fine. And next one, purchase account. See here, purchase account. Here only debit side is having the balance, that is rupees 30,000. Here means by balance June 30th, by balance carried on, that is rupees 30,000. And the opening balance of July 1st is to balance brought down, that is rupees 30,000. See, to balance brought down July 1st, that is rupees 30,000. Means we need to record the opposite side of the ledger. Okay. And next one, Gulmohar Fashion House accounts. Here 30,000 and 30,000. Here there is an equal amount. So close the account here only. That is rupees 30,000. 30,000 means there is no balance. That means there is no opening balance on July 1st. Okay. Next one, office machines account. See here, to bank account, that is rupees 20,000. That is on debit side. Here credit side there is no amount. So June 30th, the closing balance is means by balance carried on, that is rupees 20,000. 20,000. And on July 1st, the opening balance is to balance brought down. Brought down means opening balance, that is rupees 20,000. Fine. Now next one is rent account. To bank account, that is 5,000 debit side, and credit side there is no amount, means closing balance is on June 30th by balance carried on, that is rupees 5,000. Close the account and write down the opening balance of July 1st. Exactly opposite side we have to write, that is to balance brought down, that is rupees 5,000. And next one, see, salary account, that is here also June 30th, there is no balance in the credit side, so we have to close down, that is by balance carried on, that is rupees 6,000. Close the account and write exactly the opposite side of balance carried on, that is July 1st, the opening balance means brought down, to balance brought down, that is rupees 6,000. And next one, sales account. See here, sales account, that is by cash account 15,000 credit side. So here in the debit side there is no amount, so we have to now close the account, that is June 30th, to balance carried on. This is the closing balance, that is rupees 15,000. Close the account and write down the opening balance of July 1st. Write down exactly the opposite of balance carried on. See here, July 1st by balance brought down, that is rupees 15,000. Okay, in this way we have to record journal entry record the entries from journal to ledger. I hope this concept is clear to you all. If not, please leave a comment. Thank you.